Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing News Corp stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, $16 billion market cap. They're trading at $28 a share and they have 575 million shares outstanding. News Corp distributes content and data products including the Wall Street Journal, Barron's, MarketWatch, Investors Business Daily, Factiva, Dow Jones Risk and Compliance, Dow Jones Newswires, and Dow Jones Energy through various media channels such as newspapers, newswires, websites, mobile apps, newsletters, magazines, proprietary databases, live journalism, video, and podcasts. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow was $850 million. It dropped a lot in 2023, down 31% to $600 million. Still $600 million in 2024. They did complete that 2024 fiscal year. Net income is the profit or loss on the income statement. It's revenue minus expenses. That grew a lot from 21 to 22, over 600 million, then came crashing down in 23, down 76%, up 79% into 2024, 266 million. Pretty low margins. They convert only 3% of their revenue into net income. Revenue is the sales for the company, and that's pretty much flat from 9 billion to 10 billion. They do pay a dividend of 0.7%, which they can easily cover. They can cover it 5 times with their free cash flow. We estimated 4 years of future free cash flows. We also estimated a terminal value with all cash flows past year 4, that's 15 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $13 billion. We divide that by 575 million shares. And we get a calculated stock price at 23. They're trading at 28, so they're trading at a 21% premium. It's a sell according to the model. Do you think it's a buy or a sell? Let me know in the comments. Simply Wall Street's at 28, pretty much where they're trading at. 8 analysts price this stock at $32.50. They say it's undervalued. There are 42 companies in the same industry as News Corp, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $500 million in CapEx, a good amount more than the median average. A really good debt to equity ratio. For every dollar of equity, they have 50 cents of debt. They do pay a small dividend, 0.7%, but at least they pay a dividend. A lot of companies don't. They generate $600 million of free cash flow, a ton lower than WBD. They rank 6th in market cap. They're trading at 2 times book value, pretty much the median, 61 times earnings, a lot worse than the median average, 27 times free cash flow, a little worse than the average, and 1.6 times revenue. That's between the median average. They generate 10 billion of revenue, and it doesn't look like they're growing anymore. Their 5-year annual revenue growth rate is 0%. Here's their latest income statement, the first quarter of 23, first quarter of 24. Revenue is flat, 2.4 billion in both time periods. Most of their revenue is from circulation and subscription, 1.1 billion. 358 million from advertising, that's down. 484 million from consumers. And they have a real estate division, that's 300 million, that's up. Operating expenses 1.2 billion, similar to last year. SG&A 860 million. So pre-tax income 64 million, down a bit from last year. Taxes 22 million, net income 42 million. And their EPS is down from 9 cents to 5 cents. So to summarize, I have them trading at a 21% premium, ranking 4 out of 10. Would I buy them 2 out of 10? I really don't like the products they offer. I think of them more old school. Ratio is 3 out of 10. A really high PE. Price to free cash flow is decent. Financial is 4 out of 10. Their revenue is only up 8%. Free cash flow is down. But they do have positive free cash flow, so I'll give them that. But their numbers aren't really moving much. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.